My name is Niharika and I am with you with the area of accounting and financial management for bankers. That means AFM. So let's continue further. Today I'll be talking about the topic of company accounts as stated. So let's talk about it in detail. We're talking about company accounts and that is 60 days, 60 classes going on. Though less than 30 days are left, I hope you're working hard on your syllabus there and that is more important at this point of time, right? So let's continue further and talk about our topic there. Okay. The first question says, which one of the following statements is correct about minimum paid up capital of a company? If I talk about the minimum paid up capital, it is 1 lakh for a private company, it's 10 lakh for a public company, it is 5 lakh for a private company, or no paid up capital has been prescribed. Among the following, which one is true? Do you know when in the Companies Act 1956 there was a particular point there? In 1956 there was in 1956 Companies Act, it was stated that the minimum paid up capital of a private company was 1 lakh and the minimum paid up capital for a public company was 5 lakh. When the 2014 or that you can say the 2013, the Companies Act 2013 was declared there, the Companies Act 2013, which was effectively started working on in 2014, and rather it was started in a transition. Not all the areas, within not all the areas, the Companies Act 2013 was introduced. Basically, in many areas, the previous act was going on. But when we talk about this entire Companies Act 2013, under this, they said there is no minimum paid up capital for both the parties are there. That means either if we call about the private company or if we talk about the public company. For both the companies altogether, there is no need to record the books of accounts in a certain manner. That means there is no specific paid up capital prescribed for both the parties there, for both the kind of companies. Next is Food Corporation of India or FCI is an example of statutory companies, chartered companies, private limited companies or holding companies. What would be the correct answer, everyone? FCI is what exactly? It's a statutory company. That means it is required by law, or it is a chartered company. Chartered companies are the companies which were made under the charter of the Queen. Private limited companies are holding company. Private companies means any company which is not a public company. That means a company which is having less than 200 members in that company, and the working is in such a way that these organizations are closely held. Next is holding company. Holding company means a company which is holding or having more than 51% of the other company. That means it has a major control over the other company. That is holding company. So the correct answer in this case is it is a company which is required by law. So FCI is a statutory company. Next point, which one of the following is not classified under intangible assets? Brands or trademarks, computer hardware, mining rights or goodwill. See, in this case, intangible means any asset which cannot be touched. For example, I can touch this. This is basically a tangible asset. The digital tab or the equipments that I'm using, I can touch them. So they are tangible assets. Can we touch the brand mark? Can you touch the logo of 24/7? In actual, the logo can be touched in terms of printed form, but can you really touch that particular right that the company is there? Then goodwill, reputation of the organization cannot be touched. Mining rights, this is basically a right to extract from that particular mine. Again, these things cannot be touched at all. So in this case, the correct answer would be the computer hardware, because we can touch the hardware. If I talk about the printer, mouse, these are all something that can be touched. So it is computer hardware. Next point, a company offered 50,000 shares of rupees 10 each at par, payable as 2 rupees 3 application, rupees 5 allotment, and the balance on the final call. Applications were received for 60,000 shares. That means the case has been oversubscribed. For 60,000, we can give only 50,000 shares to them. The allotment was made pro rata. the excess application money was to be adjusted in the allotment money. For how much amount will be transferred from the share application to the share allotment? Number 1, in this case 60 to 50. Ultimately, the excess number of shares is 10,000. On that, the application money, see, the cases people asked for 60, we said that we have 50,000 shares. People got excited, they really wanted to buy our shares, so they oversubscribed. They asked, or they gave us money for 60,000 shares, but our limit was 50,000. Otherwise ROC will kill us. So what happens is we cannot go beyond the authority of ROC. So we got 60 out of 6,000. We said we can give you only 50,000 shares. So that means whatever excess is there, what to do with that? They said we are just paying the application right now. After this, we have to pay allotment, then we have to pay the first call, then we have to pay the final call. Even if we have paid excess today or at this point of time, later on you will be asking about the next as well. Why don't you adjust the money that we gave today for the future payments? And that is correct. Even the excess money was as 10,000 rupees multiplied by 3. The total amount was rupees 30,000, right? So in this case, you can remove 1 point. Normally there are 4 points in the examination only. So in this case, the correct answer would be 30,000. Because this is a pro rata case. That means you applied for 6,000 shares, but the company was limited to only 50,000 shares, making 10,000 shares excess. Plus the application money was 3, so it means 30,000 rupees was excess. If this was received in application, then it goes to allotment. The remaining money would go towards allotment. Right? Now, let's move on towards the next point. These are the basic entries that you can put there. Share application money that they received was for 60,000 shares. Now, 60,000 into 3 there. It was supposed to be 60,000. We received 60,000 into 3 there, but that means we were supposed to have 60,000 into 5. That is, we were supposed to have around 3 lakh rupees now. So technically, we were supposed to receive 3 lakh rupees in the first case itself. This is a wrong entry, everyone. This is a wrong entry. If I have to prepare this entry, it has to go like 60,000 was received and 50,000 was supposed to be given. So 50,000 multiplied by 3 is something that we were supposed to receive, and we received for 60,000 into 3. We received 1,80,000. So the remaining 30 was in excess, and that is what we'll be specifying here. The remaining amount is wrong in this question. Moving on. Perpetual debentures are also known as irredeemable debentures, secured debentures, unsecured debentures, or non-convertible debentures. Debentures are basically loans for a company, right? So we can specify these are bonds or loans for a company. And in case of such loans, what happens is these are irredeemable in nature, these are secured, these are unsecured or non-convertible. When we specify about this, perpetual debentures means the debentures which is basically long term in nature. Perpetual means that are going to be there till the end of the life of the organization. This means the correct answer is irredeemable debentures. So the different kinds of debentures are irredeemable, which are not supposed to be paid off till the end of life of the company. Secured, which is given with security. Unsecured, when there is no security involved. And non-convertible, which cannot be converted from that cannot be converted from debenture towards equity or preference. That is called a non-convertible debentures. So in this case, the correct answer is irredeemable debentures. Moving on. The portion of the authorized capital which can be called up only on the liquidation of the company is called authorized capital, reserve capital, issued capital, or called up capital. The portion of the authorized capital which can be called up only on the liquidation of a company. When we talk about the liquidation, only at that point of time this amount can be called up. What is it? There is reserve capital. Authorized is the one that is the maximum capital that we can raise. Second is reserve capital is the one, it's like a reserve. On when we there was a time when people used to buy scooters and all now. When the time there was Chetak and Bajaj and all these were there. At that point of time, whenever less petrol was left in the car, people never in those scooters and all, then people used to say the car has gone on reserve or the vehicle has gone on reserve. That means the last portion of the petrol is left. After this, the petrol would be exhausted, right? So that is called reserve. In this case, the companies also keep the last bit of shareholders, and in case we won't be able to receive the money, then these people are the hope for the organization. That means at the time when the people, when the organization is supposed to pay to someone, then they will pay through the reserve capital. Issued means the one which is issued to the public, and called up is the amount that we have called from the public itself, right? So in this case, the correct answer would be reserve capital. Next, premium on issue of shares can be used to buy back own shares, issue of bonus, for writing of preliminary expenses, or all of the above. Do you know security premium reserve is basically a reserve, that is security premium reserve. This reserve is basically nothing but a reserve which is specific. When we say specific, it cannot be used for random reasons. It can be used only and only for specific reasons. And in terms of the accounting there, it can be used only for 5 specific purposes. What are those purposes, everyone? The purpose would be in case of buyback, in case of issuing for the bonus shares, right? It can be there in terms of preliminary expenses. These are all a part of this. So in this case, what would be the correct answer? The correct answer is all of the above. Next question. Okay, let me add one more. Real, personal, nominal, and the last one would be none of the above. Share application and allotment account is a personal account, real account, nominal account, or none. Share application account is what? Since if we talk about share application, share allotment, share first call, share final call, in all these calls are made to the shareholders of the company. And if we are making these calls to the shareholders, then in case of such calls, what can be done? Since these relate to persons there, then it would be personal account, right? Personal account deals with the persons. It can be natural person, that is just like us, or it can be artificial person, that means a company, or representative personal, that can be outstanding salary, prepaid salary, that would be a part of it. Next, share capital suspense account is opened when the balance sheet is not tallied, when dividend is declared but not paid, when shares are forfeited, or when application money is received but the balance sheet is prepared before allotment. As such, you will never find suspense account being opened. But when share capital suspense account is opened, that means when you receive application money but you are yet to make allotment and the year end is there, that means 31st March is there, and at this point of time we cannot allot money to the people, so we will have to wait for that point, right? So in this case, what would be the correct answer, everyone? In this case, the correct answer would be D, that it can be done but only when the application is received and allotment is yet to be made. Next question, what do you mean by a contingent liability there? See, contingent liabilities are basically those liabilities which have never got a place in the balance sheet of the company, and the basic reason is that we do not add it there, and the happen. We can put it there, but there's only one problem in it. The problem is that these organizations there is a lack of certainty in it, right? The certainty problem is that these things these are not sure. At this point of time, we note it down. What if after a certain point of time we realize that this will not go into the books of accounts that way? So the contingent liabilities are liabilities on the liability side of the organization, balance sheet, then asset side as a note or none of the above. Basically, you'll always realize till the time things are not certain, they will never be a part of the balance sheet. So in this case, the correct answer is that it will never be a part of the balance sheet in this case. It would be shown as a footnote. It is a footnote in the balance sheet. Right? Okay, so that's it for the day, everyone. But have you looked forward towards our JIB courses yet? Because the examination is just around the corner. And if you haven't started, or you are thinking just to start right now, do you think you have enough time to start with your preparation? If you are doubting yourself, and that is genuine, even because the time is very less in order to look forward towards the examination. So what you can do is, in short, you can actually check out our website or our app for further details regarding the JIB study material. What you can do is go on to the website www.adda247, go on to the area of JIB and CIB. Right, in terms of this, you will find the JIB 2023. At this point of time, what you can do is, see, the point is we are not only coming up with the classes, we are also starting with the revision batch. You can look forward towards the test series. You can look at the recorded batches as well as live batches, both, right? You would want all that because currently live batches are also going on. But under this Mahapack, that is JIB Ka Mahapack, you will get both the things. That means recorded classes and the live classes that are going on. That means you won't have to wait if you are done with that particular topic beforehand. You can watch it in the live classes, but also you go through the recorded classes. There are 176 test series, 498 videos. That means both bilingual as well as the English medium batch would be opened up for you. 600 hours of classes plus 207 ebooks would be added there, right? So along with that, whatever batches we are coming up, numerical batches, case study batches, topic wise batches, whatever will be coming up just before the examination, everything would be available for you. Right? So if you're looking forward to it, then kindly hurry up because the time is passing away. And at this point of time, it is important that you decide what you want to do with your studies there and how do you cope up with it. Right? When the time is short, it's way better to get the notes which are already compiled by others and start doing it right away. To look forward to it, you can use the code Y541 and you can get it for 7474.77. That means with this amount, you can not only get this particular batch there, but also you can also get the English medium plus bilingual plus the revision batches that are coming up for each and every subject that we are already starting with. If you're looking forward to it, then keep your area of studies higher and look forward towards your preparation with all the resources that we are providing. So don't forget to look forward to our classes there. In order to know more about these things, what you can do is you can go into our app for further details. In the app, you can use the code Y541. There, if you have any coins collected or if you look forward to the app itself, you will get it for 78%. Right? So hurry up and check it out in our website or in our app for further details regarding the JIB. Or if you would like to look forward towards JIB and CIB together, that you want to buy it all together in one go, then this is basically JIB and CIB Ka Mahapack. Under this Mahapack, you will also get CIB electives as well. The validity is for 12 months. That means it would be available to you. This is April going on till the next April. This is what you will get. So at this point of time, all you need to do it, pay it at once, and your JIB and CIB, all the data would be done. Whatever batches we are going forward with, the video courses, the classes, everything is available for you. You will have to pay 12,419.08. That means around 1,000 something rupees per month. Still, it is quite reasonable for you if you look forward towards the per month pricing there, right? So if you're looking forward to it, then kindly do not delay and hurry up. Thank you.